On the table today, we're going to be discussing the two major markets in real estate investing, both a buyer's market and a seller's market. I'm going to break down each of these markets and the advantages and disadvantages of these markets. I'll wrap up the discussion by talking about how these markets originate and how to see warning signs of a market shift. With that being said, let's get started with discussing the market.
Hi, I'm Victor Maas, real estate attorney, broker, and investor, but no one really cares. What they care about is that I'm a problem solver. So that's what I do for a living, is solve problems.
I'm going to show you to find deals you never even knew existed.
Deals are everywhere, but you got to get off your butt.
One deal is all it takes to change your life. Victor freaking Maas, that's right.
So before I get started, I want to let you guys know I have Mr. Josue Robles of Robles Real Estate. He has been a broker, and for how many years, you think, Josue?
Well, I've been in the business 18 years, but I've been a broker for 8.
So he's one of my best friends in the world, and this is all he does for a living is retail sales. So trust me, he knows when markets are shifting both to sellers or to buyers. Speaking of buyers, let's start with that first. What are the characteristics of a buyer's market, Josue?
Too much inventory, too many houses for sale. They have so many options. You know, there's just a surplus of homes.
And when that happens, how do the buyers behave themselves?
Well, they start asking for closing costs. They start asking for, the seller to pay all their fees. They start asking for repairs. They're wanting to send the moon and the stars because they know that it's their time to shine. It's their market.
I like that, their time to shine. What are the advantages of a buyer's market for real estate investors?
Let's see, for real estate investors and a buyer's market, well, because there's so much inventory, if somebody, you have, where investors are looking for deals, right, or people that are kind of distressed or whatnot, and so I think that out of 10 people, 2 of them are distressed, needing to do something, so they have more of a shot at getting more homes.
My experience has been when it's a buyer's market, i.e. investor's market, really, you can buy properties at cheaper prices, and since there's not that many sellers, you get a hell of a deal. Honestly, it's one of the best times to buy. What are the negatives of a buyer's market for investors? Can you think of any?
Well, there's too much inventory. People are like, nope, I'll wait, or I'll do. They're not in a hurry.
And they're going to be pickier. So when you do these rehabs, you're going to be careful how you do it, because unless it's perfect, it's going to be hard for you to resell these properties. I think that's one of the big negatives of a buyer's market. What type of transactions should investors focus on when it's a buyer's market? To me, it's about give the buyers what they want. So focus on what buyers are looking for, a certain price point and whatnot. What do you think, Josue?
Yeah, no, definitely. I mean, if it's a buyer's market, you got to give them what they want. And so what you're saying is, they want really clean properties, even cleaner than what they're doing now. Because now people are okay. Well, we'll talk about that, where they're like, I guess I'll take that one. But when there's so many, they're nitpicking. And buyers are savvier these days. They have the internet.
And it costs, I think, a bit more to do rehabs when it's a buyer's market, when you're retailing them yourself as an investor. It also includes you having to do staging. I mean, make it so perfect for these folks that they have no choice but to go with your property. You also will have to possibly reduce your asking price. So if it's a seller's market, you can really jack up the price, but when it's a buyer's market, you got to be very, very conservative in your retail price. How can real estate investors take advantage of this type of market? Well, obviously, if you're trying to buy as an investor, you can really bring down the price, because you can be very selective on what you're buying. So during the recession of 10 years ago or so, we had that. We had lots of choices. We didn't have to just buy anything. So unless the sellers gave us what we want, we just moved on. So if they were being very picky or they owed too much, we just moved on. We could take advantage of it that way. It's our choice, because we have cash to buy these properties at huge discounts. And a lot of the sellers just want their problems to go away. Any thoughts on that?
No, I mean, you took the words. You said it.
Okay. Next question. What kind of deals should investors attempt to secure? And I just already hit on this before, the properties that retail sellers want. So if you're going to flip a house, give them the location. Give them the type of homes they want, preferably one story, 1,500 to 2,000 square feet. The price point needs to be under $200,000 currently in our marketplace. So give buyers what they want, because they don't care what you want. Any thoughts on that?
No, I mean, basically, it's a buyer's market. You got to cater to the buyer.
That's it. Cater to the buyer. Next, we have the seller's market. What are the characteristics of a seller's market? Well, they get what they want oftentimes. They can sell a crap house for top dollar, and it's just crazy. Right now, we are in a seller's market, and I'm telling you, some of these houses that sellers are selling, they have the old shag carpeting from 40 years ago, and they're still getting top dollar. They have junk in the home, they're still getting top dollar. So that's what a characteristic, in my opinion, is of a seller's market. Very little inventory. Any thoughts on that?
Yeah, I mean, no inventory at all. I had a buyer the other day call me, and they were looking at 468, which is pretty high in our retail market, even, in our market, and they had at least 12 offers on it, and it was a piece of crap. Like,
wow.
I was just like, wow, how much is that house asking for? And they're already multiple offer situation because the location and there's no inventory. We have nothing, so that's why the sellers are like, oh, I'm going to put my price here and probably get 10 to 20% higher because that's just what's going on. And I'm not going to do any repairs, and I'm not going to do anything, and you're going to pay for your own title policy.
Exactly. The next part of that is, what are the advantages of a seller's market for investors? I can tell you right now, this just happened to me recently. I bought 2 properties that were really, really run down. I mean, foundation issues, they hadn't been lived in for years. I got a hell of a deal on it because the seller could not retail it in any way whatsoever. But normally I clean out my houses and then I wholesale them. Well, the market is so hot that I didn't even have to prehab or get rid of all the junk. We're talking 5 dumpsters of garbage is what the buyer had to do that bought it for me. So I was able to get not only sell it for a higher price, I didn't have to do the prehab. So that's pretty awesome. So what are the advantages of a seller's market from your perspective?
You see investors foaming at the mouth, wanting to get a deal, like you're saying. I didn't do that. This thing. Well, because people. You have people lined up right now because there's no inventory.
Yeah, that's a big one. So what are the negatives of the seller's market? I can tell you, it is harder to buy certain properties for a lot of folks, especially those that depend on the multiple listing services. We're talking about from an investor's point of view. So if you're trying to buy properties, you're having to overpay for properties right now. And you're competing not only with other investors, but you're also competing with retail buyers who are willing to take on that, responsibility. We buy properties at 70% of the conservative value minus repairs. Right now, a lot of investors are paying 80% minus repairs. Some retail buyers are paying 90% minus rehab. So it's a crazy market out there right now. Any thoughts on the negatives of a seller's market?
Yeah. You're going to overpay, but you also are. It's kind of like, the line moves up, or you're overpaying, but then your line moves up on your profits because everybody, if you list it correctly, you'll get multiple offers and people will push it up 10 to 20% themselves. So you kind of have to see it that way too.
A few months ago, I finished a rehab. I closed on it, and I was hoping to get maybe 2-3 years ago 180 for it. That's the top of the market. I ended up selling it for $235, put 35 into rehab, and so that was awesome. But my rehab was only 35, and I only bought it for 20 grand. So that was a huge profit. Honestly, that's like 10 deals in one right there. How did I get the deal? Well, that's another podcast. But for right now, let's keep going. Seller's market. What type of transactions should investors focus on? I've often said that what investors should focus on is what wholesale buyers and retail buyers want. Nobody cares what I want. So go find what they want. And in my current marketplace, anything under $200,000 is going to sell like hotcake, either to retail buyers or to wholesalers. What do you think, Josue?
Absolutely. Anything right now, you can, like I said, like that, you can be like, here's this crap, and people are like, I will overpay for that. That's just what's going on.
Yeah, it is kind of odd that is what's still going on. I still am not a big fan of buying houses out in the boonies, out in the middle of nowhere. So I've always been buy houses.
You just have longer days on market for those.
Absolutely. How can real estate investors take advantage of this type of market? It's very easy. Go get the houses that people want, make them really pretty, and then guess what? Let buyers overbid for these properties. So right now is a great time to flip houses. Do you agree?
Absolutely, and that's going back to that. I have people, the other day we were in the monthly meeting, and that one lady was like, oh, well, I listed it, because and I've had that happen with sellers where if you list too high, you're actually going to get less because the buyers are savvier, and they're like, well, what's up with this house? Unless you have super special, to this house. So they're like, why this house? And they don't even want to look at it. They're like, oh, they're already starting at, let's just say it's $250 what everyone's spending, and they're already at $290. they're like, oh, I'm not gonna pay $315, so they don't even look at it. And then the longer the house stays on the market, the less you're gonna get in the long run. So if you price it correctly, where everyone else is paying, or a little bit under, they'll definitely push it up because everyone knows, you know, oh, 250, I have mine at 245. Why that house? They go look at it, it's done wonderfully. They just push it up 10, 20%, 30%. I've seen, you know, where it's like, whoa, they got how much more? And versus somebody who's like, I want 290 off the bat when they should be at 250. And so I guess what I'm saying is don't overprice. Don't take too much advantage of the market and say, oh, you probably will get that if you do what the buyers are used to.
Let them fight for it is what you're encouraging
Exactly.
folks
Yeah,
to
let them
listen
push
to
it
this.
up. Don't just say, here's where I'm at, and the buyers see that and they're like, oh, that's too high of a jump. So that's my message for that.
What kind of deals should investors attempt to secure? Essentially go after 3-bedroom, 2-bath, 2-car garage, 1,500 to 2,000 square feet in nice parts of town. So I've always said that go find the ugly house in a nice neighborhood, not a perfect, not a high-end, a nice neighborhood with good schools, good locations near highways. Any thoughts on that?
No, I mean, that's the right advice right there.
Yeah. In my real estate investing world, I would say use the KISS formula. Keep it simple, stupid. It's not complicated. Nobody cares what I want. Go find what they want. What can lead to each of these markets developing? Ooh, that's a great question. If it becomes a seller's market, for example, like it is now, what's causing all that? In my opinion, not much inventory out there. Why? Because people are afraid. So they're not selling their properties. And so I think they're just kind of staying pat, which means a lot of people don't get opportunities that they normally would. A lot of people are not like shifting in their job prospects. They're staying put. We're during COVID right now, and so a lot of people are just staying put. So that brings down the inventory. And so when it becomes a buyer's market, everybody's trying to get rid of their properties. Why? Usually it's an economic turmoil that's occurring, whether it's a recession, depression, any of those things. Big mortgage issue happened back in 2007, and that was with us for about 4 or 5 years. So those developments are occurred by big world events or something like that. What do you think, Josue? What's causing these developments?
I mean, well, our current one right now all over the U.S. is because of COVID. One, lack of foreclosures. They're not being foreclosed, and then that whole thing in Canada with our wood supply.
Yeah, the supply chain.
So everything is just completely just stopped, and so now, and then people are selling their houses. So it's like, okay, I can sell my house and get $1 bazillion over my asking price, but then I'm gonna have trouble buying one, and then I'm gonna have to pay $1 bazillion over. I'll stay put. So I've lost some buyers who are like, I'm not competing in this market. Then I had some sellers that are like, I'll gladly sell my house, but where am I going to go? Because there's no inventory.
Yeah.
And so this has affected everything. But yeah, that's what's happening with COVID in 2020.
Another thing that's caused the seller's market to occur is builders are not building like they used to, especially under $300,000. It's become so expensive to build houses these days that there's not a lot of competition in that sector. What's causing this is supply chain issues, like you were saying, wood coming in for framing, other material coming in from China. I mean, their ports are just bogged down right now. That's causing a domino effect. So right now, if you can find a property, if you can rehab it, hopefully a simple cosmetic where it's just paint and flooring, guess what? You're going to be able to sell that house for a lot of money. That's what I would focus on if you're into real estate investing.
A lot of my clients will put sweat equity, and they're the ones that really get big profits back because they're not paying contractors or whatever. As long as you do it, I always say the quality, and you can do the whole work for $10,000 yourself, and the quality looks amazing, then great. But someone can go spend $50,000 with the crap contractors, and if it looks like crap, it's not going to look good. It's not going to sell. And so I got what I'm saying is. So if you can do sweat equity, that's the best way, I think.
So this last question I think is a really good one. What are the warning signs for either a seller's market or a buyer's market? For example, to me, the big sign out there to decide whether we're going up or down in sellers and buyers market is days on the market, homes in inventory.
Yep.
What do you think?
Yeah, absolutely.
So right now, I think we have less than 2 months of inventory.
I think if we have under 3, then we're in a healthy market. But we have 2, I think.
Yeah, I mean,
Not
it's
even,
just
I
silly.
mean, probably.
Five months, I think, is right in the middle.
Yeah.
2 months of inventory, as they say, is just crazy, stupid seller's market. But when you have like 9 months, a year of inventory,
No, that's a
buyer's market. You can get some really good deals at that point. So here's the thing. Learn to adapt to either a seller's market or a buyer's market. For example, if it's a buyer's market, and you're able to buy properties really, really cheap, you might consider owner financing with the owners. You might be able to lock up some deals that way that normally you couldn't in a seller's market. But if it's a seller's market, take advantage of it. If you're not really into rehabbing, I'm not. I've done hundreds of deals and I'm telling you, I hate rehabbing. But when it's a seller's market and it's a real simple rehab, I'm going to jump on that and make a lot of money. So it depends on the circumstance you're in. You can take advantage of either one. What do you think?
Absolutely, and I always say, someone told me once, like, oh, I can tell you're a good broker because you've been doing this, X amount of years or over a decade, and you're still swimming. So we learn how to adapt with the market, whether we're buyers, sellers. We learn how to swim in those waters. So basically, his message is learn how to swim in any type of water.
Exactly. One of the big lessons I took from the big recession of the mid-2000s is when things are going bad and it's a buyer's market, you need to cut down all your expenses. You need to live simple for a while. You need to be a little frugal. Your life will change. You need to adapt to it. When it's a seller's market and you're killing it, you know what? You can maybe take some better trips. You might have nicer things in life. But when it's a buyer's market and everybody's tough, you gotta, get rid of some of your expenses. That's just plain common sense. As always, thank you for watching. For more real estate investment and legal real estate content, please subscribe to our channel. Please follow me on social media, which you can find linked in the description below. Don't forget to visit thevictormaas.com, where you can register for coaching and my future events. To listen to the podcast, please search for The Victor Maas Real Estate Show, wherever you listen to podcasts. Also, link below. Until next time, this is Victor Maas, signing off. Take care.